I'm joined now by Abhijit Roy, MD and CEO of Berger Paints India. Abhijit, thank you so much for speaking with us this morning on NDTV Profit. Always a pleasure to have you on. And season's greetings before we start off. It's an
Season
interesting
greeting to
time.
you as well. Good morning.
Thank you. Thank you so much. I'm going to start off with the point of impact of competition, because I think that's the biggest talking point / concern in your sector right now. I mean, you've given some indication that yes, competition has eaten up into your market share slightly, but is this something that is worrying you? How are you looking at this in the next 6 to 8 months?
So no, actually, Tamanna, it is true that competition will always be there, and it has been there in the industry earlier as well, and things do change. Yes, there has been a bigger competitor in that sense. That investment has been higher in this case, and they have garnered about 3 to 4% of the market so far. But that's something which we have to take in our stride, and it was anticipated that that much of effect will be there. But there is still a huge space open for us to grow. In fact, in our own case, for example, we are focused on now on the major urban markets, including the metros, where we have a relatively weak presence. We have a huge opportunity for growth in construction chemicals and waterproofing, where we are focusing our attention. And also in terms of distribution expansion in many areas where we are relatively weak, we are strengthening that part as well. So from our perspective, competition will always be there. Yes, it has eaten about 4-5%, because that's the stake where they are at. They are doing about 200 crores on an average per month. The industry as a whole is about 5,000 crores. So it's not as if it has impacted substantially anything. But yes, there has been some impact, and obviously what has happened also in this period is that we had a price decrease of about 5% last year, which is impacting us in terms of value growth. So there is a slowdown in the economy, there is a price decrease effect, and in addition there is this price competition or competition from the competitors newly entered. So overall it is a triple whammy for the paint industry, which is why it is optically looking different, but nothing dramatically has changed or even meaningfully has changed in the industry. I think going forward, you will see, normalized growths coming back in this. In most of the players in the industry will be growing at a good pace.
Okay, so a couple of points there which we need to take forward, Mr. Roy. For one, you said yes, there has been an impact. Birla Opus has taken up 3 to 4% market share. How do you see your market share stabilizing by the end of this financial year? Do you see a further erosion before recovery? Can you give us a sense of what you've penciled in?
From the category that, if you take the first top four, we are gaining market share actually. In the first half, we gained about 2% market share in the top four categories. But if you build in, Birla, possibly we will have a, slower growth rate, but we'll still gaining market share in the industry. So from our perspective, we are comfortably placed, this year till date, right? So this has been going on, and we expect that, the way things are going, and the plans that we have, that shouldn't be a problem, in terms of at least maintaining, if not growing the market share.
In terms of economy, you mentioned economy as well, and here perhaps do you think you have a bit of an advantage, because most of the slowdown being reported is in the urban segments. You are largely in the rural segments. Can you give us a picture of how you are seeing demand pairing out?
In paint, actually, there is no rural like we have in FMCG.
Yeah.
No one actually paints in a hut. So it's basically all urbanized only.
Fair
So,
enough.
so yeah. So we don't. But yes, we do operate. In the tier two, tier three more
Yes.
strongly, possibly. And in the metros and the tier one, we are relatively weakly represented. That's a growth opportunity for us, and that's what we are focusing on as of today. Yes, tier two, tier three slightly might be better off than the metros, not greatly different. And therefore, our growth rate, as I said, has been possibly been slightly better than others. As we see it, the plans and programs that we have in terms of our own growth plans, those are quite robust. And, I think going forward as well, you will see that, we will maintain or grow our market share.
Mr. Roy, good morning, Neeraj here. I just want to just take one step back on the first two questions and just ask you a follow-up there. So you are a large player too, right? So you will do all it takes to defend, increase your market share. But if everybody is in this kind of battle, and yes, I agree it was always there, but I think the sense that every brokerage which is holding a dealer roadshow or otherwise is saying is that the competitive intensity is heightened now relative to what it was. So my question is, could profitability metrics come under a bit of stress because each of you large players will try your best to try and defend the market share, penetrate other markets. Somebody will come in yours and you might go in somebody else's, all of that, right? So could profitability metrics over the next 12 months, 18 months, including the current quarter, come under a bit of stress?
So, to some degree it might, if push comes to shove, and if we find that, our market share, because primarily we have to maintain our market share, in this Indian market, we are number two position, at about, 19 to 20% market share. We would like to retain it at those levels. If that is there, and if there is intensification of competition, we will protect, right? So therefore, in the short run, there might be a blip in the margins. We have guided that, we will be in the range where we have always remained, between the 15 to the 17%. It might go more towards, 15 and a half, 16, in the short run, possible. But that depends on, only with the intensification of the competition, if it happens. As of now, we haven't seen anything. Our gross margins remain at current levels. It is probably one of the highest in the last 8, 9 quarters. And I don't see that getting impacted immediately. Even the EBITDA margins, because there is lesser growth in the market as of today. So therefore, the overheads are, on the higher side as a growth rate, compared to, and the scale effect is impacting us, and therefore the EBITDA margin is slightly on the lower side than what we have historically, at the highest level it could have been. Because if the gross margin is at highest, by logic, the EBITDA margin also should have been high, but it is impacted a little bit because of the slowdown. So that part, if you take it aside, if the market growth comes back, and we are expecting that the growth should be okay, relatively much better, going forward as the demand picks up, then, we will have a EBITDA growth also, which is comfortable. I can't comment on how much of impact will be there, but we will protect our market share, is that much I am very clear.
Yeah, and which is what I wanted to understand. It's like almost, that it's natural for this to happen. So people should anticipate it, but just wanted clarity from your end. The other small thing, Mr. Roy, is this. When cement saw that heightened competition between the top two players, right, it ushered in a serious amount of consolidation. A lot of smaller players got gobbled up or are getting gobbled up. Do you sense that in the paint sector? Would you go out, for example, and do that? If market share is key, then one way to gain market share is also to take control of some of the regional smaller players as well. Could that happen?
So there is a difference between the cement industry and the paint industry, or for that matter, FMCG, to a large extent. Cement, to a large extent depends on your cost of production, and it's a commodity at the end of the day, and also the freight cost which is there involved. So therefore, to do a greenfield project, it takes time and it takes a lot of money. So people find it more convenient to buy and, quickly build up share. In case of paint, that's not the case. You have to have brand, you have to have distribution, and that is not something which you can quickly acquire by acquiring small companies. So that's difficult, right? So yes, some amount of consolidation might happen in the industry, but already it is fairly consolidated. We have four big players here, and therefore, the scope for further consolidation is limited.
Okay, which is great to know. One more question is on costs per se. Now, it's been a year which has been fairly choppy on input cost pressures, but the larger belief is that commodity prices will deflate unless China really does something out of the ordinary on its stimulus by and large. Would that be a big relief for a business like yours, or not really?
So it has been, this year has been benign in terms of price.
Exactly.
raw material prices. In fact, it has softened, recently. It has been relatively, I would say, on expected lines. It was expected that it will remain benign because, the world is not really roaring in terms of growth rate. So therefore, the demand per se has been low for oil and oil related products, and hence, our prices have been also muted in terms of raw material prices. So therefore, margins will possibly remain, but if there is intensification of competition, even if, the raw material prices go down, we will be fighting in the battle in the market, and therefore, it gets given away, so it's not as if the margin will be retained fully. On the industrial side, the margins for us has been relatively much better and has grown, largely because, there is lesser competition, and hence retention of margin there has been better. On the decorative side, we will expect that, in the short run, till things settle down, probably 1.5, 2 years, and then it will be back business as usual. Nothing structurally has changed much in the industry. The industry continues to do well overall. But, as I said right in the beginning, there are three impacts which are there: the slowdown of the economy, which itself impacts. On top of it, there is this value effect, which we have. We have taken a price decrease of 5%, and that keeps hitting us. And then there is an intensification of competition in the short run. Therefore, the results are looking muted, but industry structurally, nothing has changed. Yes, there has been a new entrant. They will take some share, but it's not very disruptive as such as of today. And therefore, the growth rate will come back next year.
Will come back next year, you're saying, Mr. Roy, because that was actually my question to you. How far are you willing to go in terms of impact on margins to defend your turf and market share?
So as I said, we are geared, to protect our market share, so uh, whatever we have seen so far, it hasn't taken too much, from our profitability. Little bit of sacrifice, and we are pretty okay that way. It has to be more focused in areas where we are impacted, only where we need to spend. We need not go all over the place and spray and pray. So the reaction will be very focused, and therefore the amount of money that we need to spend doing that is limited. So therefore, margins will be protected to a large extent.
So, market share protection not at the cost of margin destruction. I think that's one clear message which has come up from
That's
Abhijit
right.
Roy, MD and CEO of Berger Paints India. Thank you so much, Mr. Roy, for joining us, and season's greetings once again.